Hi, this is your host Constantine. I am doing the Alcatraz Capital Management educational podcast. Today we'll be just having a short discussion about some of the different trading strategies one can utilize in their goal of wealth creation. There are a couple of different ways you can create wealth from trading. You can take a short-term approach, which is scalping, which is something I do a lot of. Scalping, you basically buy low, sell high. You earn a little bit of profit from a small movement in the stock market. So you will try to earn money as quickly as possible from as small a move as possible. So it's low risk, low reward, but high turnover, high rate of transaction. So if you're scalping, you can expect money. You can expect to make a bit of money, not a lot, because you are scalping. So you're playing a shorter term game. So you won't make a hell of a lot, but you will be able to make some money from a short movement in the stock market. So that's scalping. Some traders utilize that, and you've got then you can take a more longer term approach than that, which is more medium term trading, or otherwise known as swing trading. So you might trade a position, or you can make money from stock that reverses. So it might have fallen 20. So a stock might have previously gone down just due to a natural sales cycle, and you may look at this position and say, well, I can earn money from that, and therefore put in a trade where you sell when the position returns to its previous height or close to its previous height. It's not scalping per se. It's not scalping per se. I mean, yes, you're basically buying and selling, which is what stock trading is basically day to day. But it's sort of a medium-term approach. You're waiting a bit longer, and you're taking more of the pie. So medium-term trading or swing trading, you are waiting a bit longer and earning more. So you'll make more money from swing trading. Not always. A lot depends on the maths. There's a lot of maths involved. So if you buy a stock that's expensive and you don't have that much capital, you're probably going to make more money off speculating, or I should say scalping, penny stocks than trying to swing trade blue chips. So it does come down to numbers, but if all things equal, you can potentially make more money with the right position on a swing trade. So it's a medium-term position, in a sort of a medium term position in terms of time, I should say. But you can potentially earn more from the swing trade than, say, from short-term scalping. Like literally, if you're scalping, you might get in and get out of a position within 24 hours. So you'll make a lot of trades, but there'll be a lot of high-frequency trading, but for little profit on all those trades. Also, you'll pay more brokerage as well. That's one of the downsides to scalping, is the high brokerage costs. For swing trading, lower brokerage costs. You're making fewer trades, but you're generating more money if those positions do reach the levels, the sell points that you've allocated. The last is sort of long-term investing. So this is maybe more investing than trading. You would basically look at a position, and you may base your trade off fundamental analysis rather than technical analysis. Now, the difference between the two is technical analysis is looking at the price and the movement of a stock on a chart, and determining and making and coming to a conclusion about the stock from that analysis. about whether it'll go up or down or stay stagnant. Fundamental analysis requires a trader to look at what's happening in the world. You would take a macroeconomic view of things as well as a microeconomic view of things. You'll keep track of the news, and that will give you indication as to what to do longer term. And now, not that you can't get an idea of where stocks might go long term from technical analysis, but fundamental analysis gives you more. It will allow you to understand things more. You can't tell from a chart whether Apple's going to release the next iPhone and then make $20 billion from that next iPhone. So for longer term investors, long term traders, you'll need fundamental analysis to make sure that your capital goes into the right stock. Where short swing traders or scalpers, they won't need that fundamental analysis. They're looking to get in and get out of the market every day, make lots of transactions more. Whereas a longer term trader or investor may hold a position for months, probably more than just a couple of months, maybe 6 to 12 months, and let that position really grow. So it's much longer term, but potentially more profitable. I would argue that, all things equal, it kind of works out the same. I think you can make just as much money just making a lot of high frequency trades for low profit than you would just letting it sit there and grow. For all you know, you don't know that the stock will actually grow. I mean, something like the coronavirus can come along and just basically throw that plan can divert that plan away from its end goal. So I think it's, some people will say long-term trading and investing is good. I think it's really a matter of style, and it's not a style that I like. I prefer to be able to get in and get out every day. It basically avoids any kind of major issues that might pop up in the world, like Corona. Otherwise, if you play the long game, you may not be able to get out of a position if you have a lot of money, if there's a panic sell. So I'd probably say that's about it. So you've got your short, as I said, we've covered scalping, which is your short-term, swing trading, your mid-term, which is trading the swings back and forth in the stock market. So if it goes down 5 points, it likely may go back up 5 points, so you'll trade that swing up. And then the long term, which is just holding up for longer and using fundamental analysis to guide you. There's also dividends. That's not dividend trading, that's investing. So you'll buy stock with the hope that the company will give you dividends on every share you own. So for every share you own, you might receive 10 cents or $1 on every share. So that's another way to make money on the stock market. It's not trading, but it is another way of creating wealth on the stock market. So this concludes this podcast. I don't think there's anything more to cover. If you have any questions, of course, you're welcome to contact us through our Facebook page or on my number listed there. You can WhatsApp me. That's the best way to get in contact with me, or send us a message through Messenger. On behalf of Alkindros Capital Management, this is Konstantin Kai Alkindros signing out.